Hello, everyone, and welcome back to another episode of Barn Table Talks. I'm your host, Benji Bonahay, here with my co-hosts Travis Corman and Andrew Fansler. Big shout out to Experience Ag and Land Pros again for sponsoring this and keeping it going. Our special guest today is Brett Anderson. Brett, how are you doing?
I'm doing good, thank you.
We appreciate you coming on here. We're going to jump into the nitty-gritty soon, but we always started off with a little icebreaker question. All right.
Okay.
So the question today is, if you could have dinner with any historical figure, who would it be and why?
Oh, very good question. I just read a book, and it was on U.S. Grant, Ulysses Grant, and what would I ask him though? Because it was a huge book. It was 2 inches, or super thick book, and I don't read a lot in today's society, but I did read this book, and it was a biography of him and how he came from like nothing. I mean, he went broke multiple times, and yet he led this country to win the Civil War, I guess, and preserve the United States of America. And then there were some issues, some problems after he was president, obviously. But I think how did you get beat down time and time again? But he still
persevered.
Yes.
Mm-hmm.
Yes, he still was successful. And
I like it.
I think that's the thing that a lot of people, and we'll come back to answer our piece on that a little bit. I think a lot of people forget that most successful people have failed, and it's how you prevail from failing that truly matters on all that. Yeah. Benji, you're up next, man. What about you?
Jeez. Okay. Well,
I got a good one. You can't top me.
I don't think I can. I don't even know if I can. I mean, my analysis isn't going to be that deep. I was just going to say like Abraham Lincoln or something. I just think it would be cool to.
Don't sit next to him.
Why?
Ford Steeder.
Yeah.
Well, I just
choose your dinner wisely.
Just being able to talk to someone from a time frame like that. I don't know. I think that would be really interesting. Get a point of view like that. So,
Andrew.
I think I have two. One of them wouldn't be a historic figure, but I think the historic figure might be George Washington. How does a guy like that have the want, the ability, the need to rally all these people, lead them against something as big as he did? And he was already in a pretty good position in life. So again, why try to risk it all for something that it's a vision? But I think a lot of people would have said, the risk might outweigh the vision a little bit. I'm in pretty good shape, so I'm just going to hang out. But
And I wonder if it was a want, or basically if you were kind of put in that position and you're just, I accept this.
Yeah.
Like, not necessarily I want to be this person,
but I'm willing to do it.
Just someone needs to be. And I'm just acting and doing
right
type thing.
And then the other one is, I guess I would call, he will be a historic figure, but fast forward all the way to even 2025 is, Elon Musk. You talk about failure. I'd read the story where Tesla was down to like 50 grand and he'd cashed out of everything. And then it just started clicking. So he was down to absolutely nothing left. And then pulled it out. So you go from failure to worth, I don't even know what his most recent one was. What, 400 billion? Something like that.
really high. So,
yeah.
put all the chips on the table.
Yeah,
that's what he did, and he didn't have very many chips.
He didn't have any chips left.
But willing to do that, recognize and willing to do that's impressive.
Yeah.
In most cases.
All right, what do you got? You got it.
I'm excited now. Yeah,
I am.
I got Jesus in the Last Supper, man. I'm going there.
Okay.
Oh, yeah.
I'm going there.
Yeah.
Way back.
I like it.
Way back. That's just I would think that, you hope that you would be, I guess, eyes open enough to realize what's in front of you, whether it be that historical figure or others. We probably have opportunities to sit down with historical figures that someday someone's going to look back and say, man, I wish I was around when that guy was around.
Right.
Hopefully I have enough self-awareness or situational awareness to see and recognize, like, oh man, it'd be pretty cool to sit down with that guy right now.
Yeah.
Because one day someone's going to be looking back on our time saying, there is that person currently.
Yeah.
And you hope you can recognize
who would that be?
Yeah. Who would that be? Yeah. I don't know that I can name it, but I will hope I could recognize it if it was.
Right.
So
Could be Andrew Fansler.
it very well could be. I've had some meals with that man.
So Brett, tell us a little bit about yourself.
Okay, I was born and raised on a row crop hog farm in southern Rush County,
Yeah.
just north of here. Went to Purdue University.
Boiler up.
Here we go.
No, it's coming.
And graduated with a degree in farm management. Never worked a job in my life. And all I did was farm. I helped my father farm. I don't know how many generations it is. And this would have been I graduated in the spring of 98. And I remember it was like my senior year. My mom told me, she goes, "You realize you got to go someplace and work. You aren't coming back to the farm." And I was like, "What? I've never
Should have
worked."
told me earlier.
My grades might be a little better.
Could have helped me a little sooner.
And so she's like, "Nope, you got to go get off-farm experience. You need to see what it's like to work for somebody else, and it'll develop you and make you a better person." and all that
She had
stuff.
no idea what she was talking about, right?
Yeah, I didn't think she did. So then I was like, "Okay, I guess I got to get a job." So my plan is to go back and expand the hog operation, and it was interesting because the fall of '98 was when the hogs were $8, $9. It was the worst. I mean, it was complete bloodbath in the hog industry. And so she saved me from that, thank goodness. But I decided to get a job, and I think it was the first job I interviewed for. And I started working at an ag lending institution here in kind of the, I guess, central Indiana in this area. And anyways, I've been there ever since because it was like, okay, I'm only going to do this for 2 years, and then Mom's going to let me come back and farm.
Pretty simple, right?
She still doesn't let you come back.
No. So I've moved around the state quite a bit right out of school. You know, I just go to different locations, but I fell in love with, I don't know if it's the ag lending that I fell in love with. It's the relationships. I got to see, it's interesting because you can drive by somebody's farmstead and think, wow, that guy's got it made.
He's got it together.
He's got it. But the reality is he's in debt up to here, or could be. You know. And so I got to see the inner workings of, hey, this farm is successful. This farm is, what is he doing to make him successful? And I kind of got addicted to that. It's kind of like cocaine or something, you know. You just get hooked.
Get hooked, yeah.
And it was like, this is so interesting. So now I've been there 98, 20 some years. A lot of years.
Almost 27 years you've been there.
Yeah. And so I've just...
So I take it growing up, you weren't sitting there thinking, I'm going to be an ag banker.
I'm going to be a numbers guy.
No. No, I had no clue. I thought I was going to be a tractor driver.
Right.
Or castrating pigs.
Right. That's what you were going to be doing. So now you live in the Rush County area.
Yep. Finally got back to the Rush County area.
And family, you got...
Yes, have a wife and 2 kids, boy and a girl.
How old are they?
14 is my son, and my daughter's 12.
Gotcha.
We won't hold it against you. It's okay.
Right.
They probably won't listen. You're still saying.
They probably won't.
Sitting there thinking, really?
14 and 12.
So now, did you ever get an opportunity to farm?
Yes. So farmed all along. I mean, my dad...
Helped on and off with the farm. Yeah.
Yes, helped on and off. And then in college, I rented some farmland. Then I was able to acquire and purchase some farmland over the years. And so my dad's still farms as well. He's going to be 80 this year. And not turning the reins over to me. But yes, I still get to farm on the side. I still am involved in hogs.
We laugh at that, but that is something that we see that I believe is probably very unique to agriculture. The amount of time someone holds on to, we'll call it the reins of the operation. Sometimes that can be very detrimental.
Yes.
As well, but it obviously shows the passion that person has for what they do.
Exactly.
So and most times it's not a job, it's not an occupation.
No.
or a career. It's a life that they have chosen and invested into.
So, and that kind of flows along with one of our previous episodes, though. We talked about succession planning, right?
Yep.
And, it comes back to with your ability to go around and see all these different farms throughout central Indiana. I would guess a lot of probably your top farms do have a good succession plan in place, right?
Yes. I would say in general, they do have a good working plan. And they've also, I've seen the majority of operations, I should kind of outline, the majority of operations I deal with are of pretty good size. They're the larger row crop operations or kind of the central Indiana belt. And they not only have some good plans and some tax management strategies to transition, but they still have the lifestyle, but they've also have, in most cases, have children involved and have kind of delegated some responsibilities to these children. That's what I think is a big success on the, I guess, or asset for the more successful operations.
Mm-hmm. They're willing to get the next generation in quicker.
Yes.
And turn responsibility over to them. That's a common theme we've heard before, right?
It is.
It's, the younger.
Who gets to call the shot?
Right.
Yes.
You can be there to help someone not completely fail.
Right.
Learning and completely failing or catastrophically impacting the operation is two different things.
Yeah.
Correct.
And yeah. Now, with that on the lending side a little bit, does a transition plan, does a succession plan, does that influence any kind of lending? Do you guys require that for any kind of lending? I mean, is there something there from saying, hey, if something happens to you, is that required at all?
It's not necessarily a requirement, but lending comes down to what I call the strengths and the weaknesses, right? And if you've got weaknesses, what's the offsetting strength? The reason I say it's not a requirement, now we can highly encourage it.
Yeah.
Because there is substantial risk. I've been involved in those catastrophes where it's the guy suddenly has an accident and is gone. And the wife is just sitting there and the kids, and they have no clue what they're doing, what the next step is. They don't even understand, the numbers, the finances, the decisions. All of that is horrible. But if you've also got, $10 million of cash, then you can absorb some, the strengths, the weaknesses. So, but we strongly encourage it. We actually have a whole program that we can send people to for estate planning and transitions and so on and so forth. But we don't force it. But if it's not in place, it is a huge weakness.
Yeah.
Because the first and foremost is the tax consequences can be tremendous. I mean, if you're talking a $50 or $70 million net worth operation, that is well above the limits.
Yeah.
And with land prices today, it doesn't take
long to hit that.
Yeah.
Right.
Wow. Yeah. So, but we don't force it, but it is highly, highly encouraged.
Gotcha.
And I would say most of them do.
What types of services do you provide for these types of operations? I mean, I guess not necessarily services, but just primary lending. Is that what you would say is?
Yeah. The one thing that I think I've learned over the years is that every farmer, in general, I'm not trying to put them all in one box, but in general, farmers are very private. I'm a farmer. Andrew's a farmer. I don't go to him and say, here's my balance sheet.
Oh, no.
Here's my earnings statement.
Right.
What do you think I can improve? That's the reality, and that's the thing that I've enjoyed so much about my role as an ag lender.
You get to learn.
Yes. And then, I'm not an expert by any means, but I can give them feedback because I'm looking at balance sheets for 10,000, 15, 20,000 acre farming operations. And I can say, because no one else does it.
Right.
I mean, again, I'm just these eyes. I'm not very smart, but I can remember some things and I can give feedback and say, this is your weakness. This is where you need to focus on liquidity. You need to focus on this, or Your variable costs are way too high. But it's again, not that I know anything, it's just I'm exposed to it. I've got all these operations, and the successful ones and the ones that maybe aren't quite as successful, it's a huge range. And they don't have that resource to be able to, outside of
Right.
their lender,
Right.
because who else are they go? Their accountant, but their accountant necessarily isn't doing full financial analysis.
Do you think a peer-to-peer, like there's a lot of peer groups per se, like peer-to-peer conversations, where that type of information is even kind of saying, okay, guys, we're not competition sitting in here, we're here all to help. Do you feel like those are very, very helpful, very strategic sometimes?
I think they can be, but again, I feel like deep down,
It's hard to overcome.
yes,
It's hard to overcome that
private-
competition look.
that private, I mean, it is just extremely tough to know and then have confidence that, hey, Benji, I'm going to share you my financials. Are you going to go tell everybody?
Right.
So based on your experience, then, from everything that you've seen, are there any specific factors that you've noticed or seen throughout the years that are the difference maker in, let's say, a successful operation versus a not successful operation?
This is very scientific. Comes down to two factors, I think. Luck, timing. I know that's very, very simple, but that truly is. Some of my most successful operations, they were in the right place, the right time, and they made the right decision.
Gotcha.
And in general, I think it's, and I know that luck and timing, but that really is what it is. I mean,
I'd agree 100% with
So
that.
with that, though, you also said made the right decision. So
Yeah,
on
they
the
did.
backside of that, there is still some willingness to
Yes.
put yourself out there.
yes,
You saw
willingness
you
to-
had the opportunity and you made the decision
Exactly.
to go forward.
So
you grabbed it.
maybe you're a third, maybe there's three.
Yeah, that's
Decisive.
Yeah.
Maybe decisive is another one you just off your statement that
And so it's something we've talked about this a lot is you set yourself up for luck, right? By where you put yourself in
you
this.
set yourself up for opportunities.
Yes. And
in your network.
and if one of those opportunities exposes itself, you have to make the decision.
An outsider sees it as luck.
Yes.
Yeah.
But
The
once
person
you
sitting in the
you-
seat says, I've worked hard to put myself in this position.
But timing is everything because
correct.
there's, you sit back and you look and say, okay, when this happened and I made the decision to move forward, was the timing even right? I mean, I can think back to some things in my career, decisions I moved forward with. I have no clue how they worked out. I mean, I said yes, and
We're not
with
talking about
no-
marriage.
No. She would probably say that. But then you sit back and you're like, I committed to this with no clue how I was going to make it work. But I figured it out.
Right.
yeah.
And I was lucky, timing was right,
I was driven.
and I was driven to figure it out.
What was the real factor? Lucky, like I said, I think luck, I'm not a big luck type person, I guess.
I think you can create some luck for yourself, though.
I think you have to work hard
Yes.
to create opportunities that would, like I said, appear to be lucky from an outsider that doesn't know the effort you put in behind it, and stuff like that. Now,
Yeah.
because opportunities present themselves, and you have to be willing to see it, but then other people see what opportunities have been presented or captured on, and then they want to maybe bring an opportunity to you because they may have seen or the type of person you are. That's what some people are like, oh, he's in the right place at the right time. That guy asked him to be a part of that. Well, no, I'm sure that guy wasn't a random guy off the street
Yeah.
Right.
that just walked in and shook his hand like, I'm going to
want
give you
you.
a deal of a lifetime.
Yes.
It's not how it goes. It's not how it goes.
Well, and so following that up, when you look at these operations, though, probably most every one of them are very business oriented.
Yes.
They probably have very good bookkeeping.
Uh,
So what are some of the attributes to these types of people that are unique? I mean, if you had to pick out a couple more than just luck and timing, I mean, there's some attributes that probably set them apart from others.
I would say marketing, which everyone succeeds and fails at marketing, right? Of commodities.
Sometimes in the same day.
Right.
And but marketing can make a difference. But my best guys this year it might be a completely different list next year. So it ebbs and flows. But in general, if you can outperform the average, I mean, looking back at 24, for example, I've been doing a lot of financial updates with customers, and I call it the men and the boys. I mean, the guys that have sold, have the majority of 24 corn sold at $5.30 or $5.40, and in $12 beans, that's huge.
So, do you believe separation of emotion into just numbers is huge?
Yeah. It truly is.
And maybe we can explain that to some viewers that don't understand a little bit.
Yeah. Well, I mean, so you look back to the 23 growing year. It's a perfect example. When that crop was harvested, and I'm going to use corn as an example. When that crop was harvested, the price of corn was probably $4.75, $4.80.
I was going to say $4.90.
$4.90, so close to $5.
Yeah.
And historically, you try as a grain marketer, maybe you want to try to play the carry. So you want to try to hold your grain out a longer time, use your grain facility or something to try to earn some bucks. Well, the best way to do that is you have to sell the grain. You find the carry in the market and then you sell the grain into the carry. Well, 23 crop sold in 24, a lot of people didn't. They were speculating on the market, so they kept the grain, and next thing you know, they were trying to catch a falling knife. And any trader always says, don't try to catch a falling knife. Well, that started happening, and it's, hey, now we got to make space for the 24 crop.
Yeah.
So we're just dumping corn like crazy at $3.50. So you lose $1.50 a bushel, and maybe that was on a couple hundred bushels an acre. And now you're saying, oh, wow, we just lost $300 an acre over, 1,000 acres. Oh, we just lost $300,000.
So it's basically a gamble there.
And you just gambled.
They gambled it.
I mean, it's pure speculation. You hear people talk about hedging versus speculation.
It's pure speculation. It's pure gamble, especially if you leave emotion in the decision.
Yeah.
Yes.
If you know your numbers and say, I have to be able to put this in my bank account to farm again next year.
Yeah.
Right? Mm-hmm. That is where a lot of people try to outsource their marketing, grain marketing, right? Because that person is that's their job, is to sell grain.
Yeah.
They're not emotionally attached. They don't know they know how much work went into it, but they didn't grow that acre. They don't know if they have to dig a tile hole to replace it. They don't remember all the blood, sweat, and tears that went into that acre. That is one of the worst things I think growers are, is they're emotional.
Well, and Travis, you and I were talking prior to this coming on about a new startup company. I was telling you about Croptel. And, they've got a very basic version to start off to try to help farmers develop a budget. And because most farmers sit back, and I bet you probably don't see a budget very often, do you? And so on this type of deal, they're just trying to give you a basic dashboard, right? Enter in a handful of data. It's going to take you 15 minutes. And we've got to get this started somewhere.
So like this Croptel, we've looked into this space about trying to provide this service to be able to go, to Brett and stuff like that and say, okay, hey, this is where I sit, and try to keep these things updated. Give me your receipts. What'd you spend? How's it tied to this piece of equipment? All of this, drill it down. But like he said, it's very hard to get that information and get someone to say, oh yeah, here's my everything.
Yeah.
Right?
Yes.
Right. Then also, a record keeping. They're not great record keepers, most of them. I'm not going to lie. The dashboard of the truck, guys, newsflash, dashboard of the truck is not a filing cabinet.
Right.
So, but Harvest Profit, we looked into Harvest Profit for a very long time. I was discouraged when they got bought out by their, by who purchased them and stuff like that. I think that kind of discouraged our continued use of it and stuff like that, because you don't know who's using that information in the background is just as important as what comes out the front side.
Who has it on the front side,
And that's some very valuable information coming out the back side. If it's going out somewhere without you being okay with it,
Right.
That's huge.
Well, it comes back to, knowing who you're working with.
Yeah.
And I mean, so like on that side of it, Brett, do lending institutions share benchmarking data with public places? I mean, not going to share me. Hey, we got a client, Andrew Fansler, but hey, here's
I share it. Adrian.
here's a massive amount of data sets that we can share. Do lending institutions do that?
Yes. We have what we call a program, but I call it peer data, and I can try to create parameters around that. Say, okay, you're a 4,000 acre, or you're an 8,000 acre. Try to size it down, and it's very simple, and it stacks, and it says, okay, here's your variable cost, here's your labor cost, here's your, how do you compare? Here's the working capital, here's key ratios. That kind of it's on a very simple form. Obviously, names are removed, but this is real data that we can provide back. And then it's kind of shocking to put that in front of people, because, you may think you're really awesome and you've got everything, but
You see that.
And I got a guy here that's got twice the working capital and owns, has half the debt or whatever it is. It's like, makes you go, oh my. But back to what we were just talking about too, I want to point out, high markets create laziness.
Oh, yes.
And with the trend we had, the cycle we were in with $6, $7, high commodity prices, you don't have to take the time because it just works. Or you don't have to market because it's $6 today. It's probably going to be $6.20 next month.
Just sit.
And so we had that 21, 22 into 23 that caused farmers. I mean, I always say, and I'm telling my customers now, you got to get back to the basics. You got to know your cost of production. You've got to put together a cash flow. But when you're printing money, because it was very good during that run up.
I was looking at the average. I did a planner clinic yesterday, and one of the last things I put together on it was a little bit of downforce, because I'm a huge fan of downforce, and I do think that downforce pays. But gave us the average price of the last 6 years was $4.53 is what the average price was. So like that would have been 18 through 2023. 18, 19, 20, I think were lower, and we had 3 years of higher.
Yeah.
But the average washed out to 453, which you guys probably both know the closing price or yesterday on corn.
If you look at the March futures, probably about 485 yesterday. March futures would probably be 490.
So
today.
So as much, I mean, really we've been playing. I mean, this is an average, where we're at currently and stuff like that. But it makes us better business people.
Yeah.
When things are tight, and that's what you're referencing, I think.
What you do in the tough times prepares you for the good times, and then vice versa. What you do in the good times prepares you for the tough times.
So, okay, that flows into a question then. So, you've probably got a lot of different customers in different stages of their life, right?
Yeah.
So, how do you approach this? So, you may have, customer A that's 80 years old, still not willing to give up the reins. And you got customer B that might be 35 years old and got the reins because dad gave them up 10 years ago.
But then go to C, and it's the guy coming straight out of college, has this big dream and aspirations of buying ground and starting his own farm, right?
Yeah.
He wants this, the first farmer loans or whatever.
Yeah.
Beginning farmer. Beginning farmer thing.
Yeah.
It's like,
So what's your approaches look like? How do you go talk to these people?
Well, you kind of.
how do you discourage all of them?
Right.
I was thinking, how do I encourage them? Because that's the hard part. Well, I think I am blessed that I only have like 40 customers, and they're all of size. But so I think I understand and know my customers pretty well, their operation, and I've been at it long enough to be very familiar with them. So I think you just always adjust as you go, to meet with them, or whether it's a new prospect, you kind of try to get the details and you do the research. And my network's good enough that it allows me to know something about somebody before I just pull in the, their
To meet them.
yeah.
Yeah.
Hi.
Yeah. Yep.
But so I think you just got to understand and spend the time to get to know them. I mean, we're all people. We all want to feel like that. Hey, he kind of cares. He might be able to help me.
Right.
So I think you just got to tailor it and adjust it because I got some operations. Those guys know what they want, and they're very driven people, and they will ask for my feedback. They might not always take it.
Yeah. Well, it's something interesting I've complained about for years, being in the real estate world for as long as I have. One of the frustrating things I always tell people when they come to me and they say, well, you're talking about buying a farm, they'll be like, well, let me talk to my banker. I'm always like, listen, a banker is in business to loan you money. And then when they'll give you the feedback, hey, let me talk to my accountant. It's like the accountant's in the business to limit your taxation. A financial advisor is to try to maximize your return on investment. So somebody has to be able to pull these things together. That's the person you want. How often do you get that? How often do people come to you and say, Brett, I'd like to buy a farm and here's the numbers?
And I say no. Yeah. I mean, it's probably more often. I mean, I get calls, my phone on a daily basis. I get a lot of phone calls, and they maybe call me saying, hey, I was thinking about trading a tractor. I was thinking about this. What's the impacts? And most of them, they can do it. They don't need my blessing. They just need that sounding
Reassurance.
board.
Yeah. Sounding board.
They need somebody just to listen and so because
Speaking out loud sometimes either speaks sense into them or reassures them.
Yes.
Either direction on that.
Yeah. If they can hear themselves talk through it.
Yeah.
Verbally.
But you're right, Andrew, like on what you were saying over there too, is like not every person can fill every seat, and you need to basically step back and look at it from a position like, okay, let me, real estate, right? Talk to a real estate professional, right? Not someone that's trying to sell you real estate,
right. Someone
that's actually going to make sense of a business decision,
right,
and the why,
right?
And that's what all, I'd say, advisors and partners do. That's what you do for your clients and stuff like that. So it's not just a one stop. It's the team. Once again, it's who you your professional advising committee or whatever you want to call it. Around you,
right?
Being a member on the team, and to be truthful, I've made bad loans, and they are not fun.
Oh, I'm sure. You learn pretty quick probably from
Yeah, and so I'm not scared to say no. And if I truly believe that it's not right for the operation, I would tell them no.
Well, you've done it long enough.
Yeah.
And so on the early days, you want to please everybody.
Yeah, you just want to make loans.
Yes.
It's like, I'm going to hand out this money.
and now you're like, no, it's a bad idea.
Because when you have to come back and it goes to the point of a collection or something like that, it's like, I'm sure that is the most painful thing you have to do. For one, that person's probably turned to a friend at that point beyond just a, business transaction. And it's like, oh man, now I have to go. And this is going to get professional and real fast.
Yes. And you're the enemy.
Yeah, I'm sure.
Yeah.
Yeah. I've been cussed at, screamed at, laughed with, and cried all in one conversation. I mean, it's like all the emotions that you can imagine.
It's everything, yeah.
Yeah, when things start to go bad.
So what are some misconceptions about who you are and what you do when you're an ag lender? I mean, because I think he's an ag lender. He's just trying to loan me money, right?
Yeah. I would say a lot of the times when someone fails, you have the need to blame somebody else. Right,
that's probably human nature.
Yes, exactly.
Sad as that is, it's
human
very
nature.
Few people directly go to self-realization that this was on me.
Yeah,
yeah,
and typically, if something bad happens, the easiest person to blame is the lender. They got me in this spot. They were the one that gave me the money. They were the one that encouraged me, and unfortunately, the lender might not have made the 15 decisions that caused the Titanic to sink.
Right.
We didn't hit the iceberg.
Right.
So I think that's that's one, is that, don't get me wrong, I mean, we're not perfect, but I think in general, it's like you said, the team membership. We're all on this team. Like my customers and we all want to succeed. We all want to be successful. And so, but unfortunately, when it does go wrong, then
It goes wrong fast.
yeah.
So what do you see coming down the pipeline in the ag lending industry? I mean, you look 5-10 years ahead. I mean, what's out there? What are some things you think could be changing? Or what do you think?
I think in general there's some big improvements that could come to those core basics, like we said, and you guys mentioned those various programs that might do cost of production. But there needs to be a better form of data sharing. And I don't know how you convince farmers to do that. But like I wish, in which I can go into, is it still granular? Or did they change the name?
They've changed now, but yeah.
Yeah,
A
whatever.
platform similar, yeah.
Yeah. And I can go in there and I can see their cost of productions, or I can see where they're marketed. I mean, I think that's going to continue to be beneficial, whether that's in John Deere Ops Center or whatever it is. That technology platform, because the technology, as you well know, is changing drastically and rapidly. I think we're going to have to get through this downturn, and maybe we're through it. Maybe I don't know. I mean, commodity markets have rallied a lot, but we've got to get this correction. I'll call it a correction, maybe.
Right.
We've got to get through that, because I don't know if this rally in the market is just short-lived, if we got other problems.
If this is where we're going to settle out to be,
Right.
where it's going to be, right? I mean, none of us can really tell on that, but
Right.
now.
But where we are today versus where we were 6 weeks ago, huge difference.
October 15th, corn was trading 80 cents lower, 90 cents lower, $1.50 on beans.
Yeah.
If you mid-October during harvest.
Right.
So we've had a tremendous rally.
So what's changed that though? I'm curious. I know that's like a huge question, but
what's that? Is it the Progressive commercial? So what is the economy? Remember that one on TV?
Right.
Well, I mean,
but from an outside perspective, like what does affect that significantly? I don't know. I know that can be a lot of things, but
The fundamentals, there has been fundamental support. They reduced the yields. So that, obviously, the carryouts lessened. A lot of it, though, is the funds decided to go long.
Yep.
I mean,
And that's one of the things that Brett can speak way
go
deeper
ahead
into
go.
than I
The
can.
funds decided to go long. Don't know what that means.
absolutely not.
Go ahead and break that down and
so
explain
what
that.
that means is, so the funds are what they call managed money.
Okay.
I read something, I don't know when this was, probably a month or two ago, that we have the Chicago Board of Trade that determines the corn and the soybean, the wheat, all of these markets.
Commodity prices.
Yeah, commodity prices. I did not realize, and I can't remember the article I read, but almost 90% of the trades done determining our price of corn or our price of beans, I think it was in the upper 80s, maybe it wasn't 90. Don't fact check me. I don't know for sure, but it was a high percentage was done by computers. It was not done by ADM. It was not done by Cargill. It was not done by farmers. It was done by computers.
AI.
AI.
Gotcha.
Yep.
It's kind of been another common theme
It
lately.
has been. We've been on that one today.
Yeah.
Love Copilot.
But that's it. I mean, these funds, so this managed money,
Yeah, it's managed.
are buying and selling commodities when they want. So they buy, they sell, and it's driving the market based on they probably look at fundamentals somewhat.
They do.
But it's not like you go back 20 years ago and it was simple supply and demand.
Yeah.
I mean, it was very simple. You could look at charts, you could watch what was going on.
Open bid outcries.
Yeah, and it would kind of give you an idea what was going to happen. Not anymore.
But I mean, it's from a world influence too, though.
Oh, yeah.
It drives
We're in a global market.
that greatly. So they're looking at what the production is in other countries.
How they're doing and whatnot. Yeah.
Are there Yeah, South America is a big cry. Like, how much is China using? How much was it India? Like, where's Mexico? Is Mexico is our largest consumer of beans currently?
Corn.
Corn.
It's
Okay,
corn.
corn.
Yeah,
Sorry,
one of them,
corn.
yeah.
Stuff like that. What's your relationship going with those countries? Like, all of that, to my knowledge, it plays into a huge role.
Yeah.
So as we talked, they came out and said the yields aren't as big as what they initially thought, right? So it's created a massive run up in corn. And now one of the things they're talking about is, in the event that President Trump and his administration puts tariffs on, will that have an impact of our trade with these other countries? So could that impact it? Could it bring it down? Who knows? We don't know yet.
If we tariff importation of other countries' goods, it means they're going to tariff ours, which makes the cost of our crop go up for them to purchase, right? Which means they're going to look elsewhere and buy it somewhere else if it's a comparable product or cheaper, right?
Yes.
So essentially that.
Yeah.
Right.
So it'll be interesting to see kind of how that plays out. But that all comes back into what you do from a lending standpoint.
Yes.
When you're looking at these balance sheets, a 50-cent swing
It's
in
huge.
corn.
When you got 1 million bushels of corn, that's real money.
Yeah, 50 cents. There's $500,000 to the plus or minus.
Yeah.
I mean, that's game changer stuff.
Yep.
I mean, it's just it's crazy. So you talked a little bit earlier about, on failed loans, things like that. So that's definitely a hard part. You've talked a little bit about some of the best parts of your networks. If you could separate the hard part and the best part and say, what is one thing that makes me get out of bed and want to go do ag lending? I mean, what's probably your prize?
In general, farmers, I'm one of them.
Mm-hmm.
So I'm not trying to talk myself up, but in general, they are good people.
Mm-hmm.
And it's the kindness. They're very smart in general. I mean, as a farmer, you have to be, I call it the jack of all trades, master of none. You got to know marketing. You got to know, how do I work on machinery? You got to know, what are these chemistry that I need for this burn down? There is so many things. Mm-hmm. You also got to be technology. I mean, farming today,
It's nothing like it was 10, 15, 20 years ago.
Right.
And it's so fast changing.
Yeah.
It's so fast changing. And that's what's happening in farming operations is the amount with which they change.
Yeah.
And, it might be white corn. It might be this. It might be, there's all kinds of different avenues. Mm-hmm. They might be raising non-GMOs, the seed beans or Plenish, or there's all kinds of stuff out there. So they have to be kind of jack of all trades, but they're at the core, they're very, very good people. And I think that's what makes, contributes a lot to the country.
Right.
They choose to live a very stressed life.
Yes.
With a lot of unknown, uncontrollable factors.
It's a commodity market.
Yeah.
You have no say for what you spend for stuff. Very limited.
Right.
You can't go and say, well, I'm only paying $100 for 28.
No, you're not. You're not getting it here.
and then, so you have very little say in what you spend your money on from inputs, and you're selling a commodity.
So this brings up, we had an opportunity to go over to Europe, and Europe, they have a lot more government control.
Yes.
Over production. They limit their supply, make sure there's always demand.
Yeah.
Right? It's essentially, I'm sure it's more complex than that. Long and short of it. And there's talks. Is that something that needs to happen around here? Nobody, myself included, it never turns out the best. I don't believe I don't believe in that system at all. It is very hard though, because farmers are their own worst enemy.
Yes.
How am I going to beat a price? I'm going to produce more.
Yes.
Because we already have a supply. We have this whole stack of corn over here that's causing this to be lower, but I got to get past this being lower, so I got to produce more.
I got to produce more. I've got $5 million of equipment sitting here. I need another 1,000 acres, and no matter what it costs, I'm going to spread that equipment cost over another 1,000 acres. So I need to go rent it. But I think what scares me about the government intervention here, and I was at a conference in Florida, and this guy was presenting on South America, and he showed a map of the Corn Belt, of the United States and how big it was. And then he clicked a button, and he said, this is the amount of grassland in South America that could be converted to cropland. It was way bigger than the Corn Belt of the United States. And I was like, oh my gosh. So if the government starts to limit us here, then it's all going to be South America at that point.
Right.
Wow.
Yeah.
And then we're in a bad spot.
Yes. It's one of those
But the
things
government would have to support us and maintain us and all of that.
yeah.
It wouldn't be necessarily as free enterprise as what it is
No,
today.
right. And it's never anytime you have that support like that really.
But cheap food. I mean, that's the key with commodities and the competition. We're very fortunate as a country to have cheap food.
Right.
Yeah.
Right. So, say you got a guy, a gal, a young person that is fresh out of college and they want to come borrow some money.
Yep.
What do they even need to do? What do you want to see from that young person for them to come and say we're going to borrow some money?
And a lot of young people are highly discouraged. If you don't have an operation to go back to, if you don't have that base to start with, you know this, it's like, this is a mountain I just can't climb. That's what it seems like. But the reality is, $15,000 an acre farmland is never going to pay for itself, right? But guess what? If it did, we'd all be buying it.
Yeah.
Right? And it wouldn't be 15,000.
Right.
So it is very challenging for a young person that does not have, either the farming operation to take over. It doesn't even have to be family. It can be somebody retiring, or his or her family doesn't farm. But there are some programs. I mean, it's a crawl. I remember I had goals, net worth goals, when I first started farming. I was like, I want to be at this net worth by this, and then this net worth. And I would tell you, that first $100,000 net worth, you're going to work your tail off, and it's going to never seem like it gets there. But it's a snowball effect, right? And that's some of my most successful farming operations. That's been their approach. It's like, how do you eat an elephant? One bite at a time.
Got to start.
Yeah, and you just keep gnawing and gnawing. But there are some excellent programs, especially government-backed, FSA, beginning farmer programs. I mean, you can go and get almost 100% financing if you want, and they're very good interest rates, so on and so forth. So there are programs to start, but you've got to prove yourself. You've got to put the effort into projection, to a multi-year projection.
Got to build a business.
It's not easy money.
No.
Yeah, it's
Like
a
they
business
want to.
plan.
Yeah, I mean, you have to mature very quick too.
Yeah, that application isn't one page.
Yeah.
It's a lot of pages, and they're asking for everything, which is great because it stimulates your thinking,
Right.
the thought process on all that.
You mean it doesn't just say I will pay you back?
No,
I owe you.
I owe you. Like the sweatshirt.
So, kind of along those same lines, you're late 40s now.
49.
If
I'll take it.
If you had the opportunity to go back today and talk to 20-year-old Brett Anderson, what would you tell him?
Be more aggressive.
You'd tell him to be more aggressive.
I'd be more aggressive. I truly would. Because I think when we all see those failures or involved in those failures, you kind of get jaded and you get conservative. And the reality is once you get some net worth, it's like, well, I don't want to risk this. It's like, but you need to take that and say, okay, I have 100,000 now. Let's make this 200. Let's do it as quick as we can. Let's Elon Musk it. Leverage it out.
Elon Musk it.
Strap your saddle on. Here we go.
Yeah. I think you should be more aggressive. Now, it's easy to say that looking back, because look at the trend in real estate values. Look at the,
But Brett, I think you could look at any 50-year cycle of real estate values. I don't care what year you start with. I bet if you pick a year anywhere and say we're going to go 25 ahead, 25 back, or I'm going to go 50 back, or I'm going to go 50 forward, you will see a trend in real estate is up.
Yeah,
There's
always
peaks and valleys. There's always ups and downs throughout that road.
Yep.
But it appreciates. Any one of those you pick, you're going to see appreciation.
Yep.
And to me, that's the hard thing when I talk to people now. You mentioned $15,000 an acre ground, and you're like, it'll never pay for itself. Well, it never paid for itself back then either. There was always risk. There was always stress. There was always all these other things that came with it, unless somebody bought it for you. I mean, other than that.
Then, obviously, a lot of your lending is for continued purchase of acres or first purchase of acres, whatever it is. And that's, right up your alley and stuff like that then. So when you invest in situations like that, are you investing to build your overall collateral to borrow against? Like, so someone like myself, I don't farm. I don't actually turn the dirt, stuff like that, right? But you want to go and you want to buy this ground that's $15,000 an acre, right?
Mm-hmm.
How is that viewed as a long-term investment? Are you just trying to borrow against it eventually? What are you doing with it?
Well, so I would say if you look at land values, so obviously diversity, right? And real estate's something you can see, touch, and feel. It's not the stock market that today that company could file bankruptcy and you're like, oh, yeah, I just lost 50 grand on this company. But it's not going to probably disappear. And but there are times that appreciation factor, and Andrew would know much better, but if I look at the run-up that we had, really, we had a run-up going into 12, and then in 13 it started tailing back a little bit. But, there was many a farms bought even 10 years ago, 16, 17 range that have probably almost doubled in value since then.
So you look back at 2020. Okay, I'm going to just go back in that range.
Doubled in value now.
Doubled
in value. Okay, yes. But how does that impact you if you're not willing to separate from that purchase cost?
Yeah.
So here's my thing. So you go back to just 2020, and you go from 2020 to the end of 2023. Okay, so that 3-year period, there you saw values double, right? You didn't realize any of that unless you sell it.
Yep.
So to me, when I look at farmland as a real estate investment, it's a long game. Okay? Yep. You're buying it, and in most cases,
you're willing to sell it in the long game.
Yes, you're doing one of two things. You're either selling it or you're dying with it. Those are the two ways you make the most money with it. Because if you die with it, it is a great way to transfer the wealth.
Yes,
right?
To the next generation.
And so if you're a legacy investor, it's a great thing to take it and die with it, transfer it on. Hopefully the next generation dies with it, transfers it on, and now the legacy is built along with wealth. Because, I always call the cash rent a dividend. You can call it whatever you want, but that's just what I call it. It's a dividend. And your gain is your appreciation. And so, the only way you're ever going to get out of it is to sell it or die with it. And, but a lot of people just use it as a diversification, and knowing that they're going to die with it as a transfer of wealth.
And real estate is a huge risk mitigation.
Yep.
And what I mean by that is some of the biggest net worth clients I deal with that are full-time farmers, they got a pretty solid land base. I mean, a huge, like I said, hundreds of millions of dollar net worth. And it's because of a huge land base. And that land base is there obviously on paper for net worth, but it's also, if you have the holy cow kind of moment, and we have back-to-back years to where you're just losing money left and right because of the commodities, you got something you can pull out of. You can say, okay, I'm going to go ahead and leverage some of this land, inject some cash into the operation. As a lender, hard assets like real estate, that typically doesn't depreciate like equipment. Hard assets like that are very friendly to the lender.
Yeah.
You know,
So would a lender has to, capitalize on it or move in that direction and stuff like that? Is that just a resale at market price? Is that lender to say, hey, are we going to continue to own this from a lender standpoint? Or are we going to invest into our lending institution stability? Or are we going to resell this back up to market price?
Yeah.
How does that work? And are different lenders different, possibly even?
yeah, there could be a difference. And what I was referring to is they could come and get cash. They could get a loan and mortgage.
But if say they
that
can't
farm.
cover that part,
Yeah,
and then you have to take the dirt.
Then we'll typically liquidate. We're in the real estate holding business.
Gotcha.
Most lenders aren't in the real estate holding business, and because you got to think of the timing too. If it's
kind of a bad look on the lending institution
Yeah.
as well.
Right. Yeah.
Yeah.
In most cases like that, the lending institutions will call a real estate liquidation company that does auctions, and they'll just auction it off and sell it that way.
They want
and to
out
be
of it.
honest with you, you look back the last 10 years, and there's been very few of those. And times gotten a little tougher. You might see a few more coming along, but a lot of what you're going to see today isn't going to be a complete out of business deal.
No, it's a
It's going to be, hey. They're going to spell off this, you're spit this off just to put some cash back into the operation to be able to fight for the next day.
Gotcha.
So, again, real estate is just a bank account that you're going to die with. You're going to sell it and sell it for whatever reason. There's a farmer in Rush County that I've always, admired big time. And he always thinks it's crazy when I tell him, I've listened to him growing up. And I remember him saying one day, because he's bought lots of ground, he said it's no different than putting money in a bank account and you're making interest on it. It's just I'm putting all my money in land, and if I ever need it, I'm just going to sell a piece.
Yeah.
But if I don't need it, I'm going to die with it and move on. And I mean, that's just a great attitude to have.
and the kids can sell it.
Yeah, then the kids can sell it
Yeah.
and go buy airplanes and beach houses and all the fun stuff.
Yeah.
So, well, Brett, I appreciate you taking time, coming and hanging out
you.
with us today. I know Travis has got a couple little rapid fire questions to
fun.
to end the day here. So
Yeah.
let's see what we got.
Okay.
Do I get a pass?
Sure. If it gets to that level, sure.
You just answered.
They don't typically get to that level, but yeah.
Okay.
That's fun. Favorite ice cream flavor? What do you got?
Mint chocolate chip.
Ooh, I like it. Do you Culver's mint chocolate chip? You eating theirs?
No, I haven't.
But don't. I don't want to disappoint you, but don't.
Is that
they
ice
squirt
cream?
like syrup in it. It's custard, but they don't actually it's not the same. They just make it on spot.
I love the green.
It's not as good. I do like mint chip though. Yeah. What's your go-to karaoke song?
Jenny, 8675309.
I'd love to see you jamming out to that going down the road. I'm not sure I believe you, but
Well, I do have another one, but it's not PG appropriate.
what's precursor to the karaoke night is probably more clue to that, right?
Yes.
Yes. When I actually get the mic in hand and I'm in front of people, that's
There you go.
Yeah.
I don't know if I've ever partaken in a karaoke night.
I would pay to see that.
Yeah.
I would pay to see that, Travis.
Nah, it's not me.
You can go to St. Paul. They still do it Friday nights.
Oh yeah, they do.
Yeah.
Friday nights.
Tiki Bar's got it too.
Know that I've been there.
Tiki does?
Yeah, Tiki Bar's got it too.
Yeah. So, favorite season. This is kind of good. This probably wraps around you being a farmer or
Yeah,
stuff
it's
too.
spring.
Is it spring?
It's spring.
Yeah.
I think it's spring just because from the lending standpoint, January is rough because you're doing annual financials, February renewals, March renewals. And it's especially after this January we're having, I mean, I've been selling hogs and it's -10 in the morning. And it's that's why I sound like I do because I got a cold. So it definitely, I think it'd be spring.
Yeah.
Yeah. You the same?
Oh, no doubt.
No doubt. I'm a fall guy.
Yeah.
I used to
Do
be
you like
spring.
fall?
I used to be spring, but spring is the most stressful time of the year for us with the business. So that has kind of sucked a lot of fun and a lot of enjoyment just because you were always, your mind does not stop, I feel like, in spring.
Right.
I could see that from your
But
side.
to me, it's a start of a new beginning, right?
Yes.
So it's warming up. I'm tired of being cold. I'm ready for some heat. I'm ready for some sunshine, and I'm ready to just let's get going.
Yeah, I think I used to like that, but now it's just like,
It's overwhelming.
here we go. Yeah. That's the beginning of the elephant is what's right.
Yeah, the chat.
All right, what else? Let's do one more here. You have a guilty pleasure snack.
They are so expensive. I love whole cashews.
Whole cashews.
Not the little pieces you can get at the Royal King and the tin.
not the cheap ones, not the good.
Whole cashews. I love those. But they're they're expensive to get whole cashews.
But they're good.
Very good.
I don't know if I don't.
Because you know why? Because when they're screening them, when they're running them through the screen, the end product's the whole cashew.
Yeah.
And all that scrap you get,
Yeah.
that's just the scrap.
Yeah, they probably have huge 60% losses. I don't know what they have where it's not a whole cashew.
Right.
You could have gave me 100 guesses, and I would not have guessed that. Not at all.
What's yours? What's yours?
Mine, probably Cheez-Its. As funny as that sounds, yeah. I'm a Cheez-It guy. I like Cheez-Its.
Orange fingers.
The little Cheetos? Like the Cheetos? No, like the little square cheese.
Little squares. Just a square Cheez-Its. Yeah.
Okay.
Just the squares.
Yeah, they don't get dusty on your fingers.
No, those ones aren't bad. No.
Okay.
But
You got one?
Oh, peanut M&Ms.
Peanut M&Ms.
it's a good one.
Oh,
Too.
yeah. That's a no-brainer.
Travis?
I love peanut M&Ms.
I like peanut butter M&Ms. Sunflower seeds. I get hooked on those things sometimes.
What about them donuts you always eat?
That's just doing
That's
a
just
job.
breakfast?
That's just doing a job. Get me get me to lunch.
Keep going.
I thought you actually liked those.
No. Half the time they're stale. They're not really all that great.
Oh, my.
Brett, thank you for coming on. We do
Thank you.
appreciate this. It's been fun, been enjoyable.
Really good combo. So,
No.
well, thank you guys for watching. Thanks again to Experience Ag and Land Pros for sponsoring. Check us out on YouTube, Spotify, and Apple Podcasts. We're on all those platforms. So hopefully we will catch you on the next episode. Thanks.